When the interest rates rise is on the horizon, better to unfix yourself and choose to float with the help of floating rate funds. Floating rate funds predominantly invest in floating rate instruments, which pay a floating rate coupon that changes based on a benchmark reference rate like MIBOR. Floating rate funds benefit from the rising interest rates, gains from the compression of spread between fixed yielding bonds and OIS, and provides higher yields when overnight rates rise due to liquidity concerns. The fund offers enhanced yields during the rising interest rate cycle, provides flexibility to invest across credit and maturity spectrum, entails relatively lower interest rate risk. In the current market scenario, on one hand, there is an upside risk to inflation due to rising commodity prices, fuel prices, and increased logistical costs. And on the other hand, RBI may continue with accommodative stance with a focus towards reviving the growth in the economy. Also, when the normalization of yield curve will happen, it will push MIBOR rates higher. Wish to benefit from the current economic scenario? Presenting Tata Floating Rate Fund that invests at least 65% of the money in floating rate bonds, which have a spread attached to an external benchmark rate like MIBOR that makes it floating. The fund will follow a three-pronged approach towards portfolio construction by maintaining high bias towards quality portfolio, aligning duration with interest rate view, remaining biased towards accrual strategy. Therefore, if you wish to minimize the interest rate risk in your portfolio, have better portfolio diversification, and benefit from the rising interest rates, then you may consider investing in Tata Floating Rate Fund. For more details, contact your mutual fund distributor. Call us at 022-6282-7777. SMS TMF to 57575. Visit www.tatamutualfund.com. Tata Mutual Fund, खुद पे विश्वास है, सबसे बड़ी investment. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.